to the Monday Futures Market Outlook for May 31st, 2011. This is Patrick Svarazna. For those of you that have not had an opportunity to try out eMiniSource.com's trading room, a 5-day complimentary membership is available on the website. As always, we start off with a weekly chart of the S&P 500 going back 3 decades, and when we plot an 80-week moving average on there, it does a very good job to depict the bull and bear market cycles that the market has gone through. We've more or less now gone into about a 10-month rally, and now we're about 2-3 weeks into a market consolidation on the downside. At this stage, it's very natural for the markets to continue to consolidate on the downside. We don't necessarily believe that this is the beginning of a new bear market, but rather simply just a much needed market consolidation after a substantial rally at some juncture that should emerge as a buying opportunity over the next couple months. Just to review our key intermarket observations, we have been looking for a high of the year to come in somewhere around this 1350, 1380 area, or at least a high of the second quarter. And essentially, we had a market that rejected off that zone. In the bigger picture, we're going to remain with our intermediate bullish bias on the broader markets, but we do also believe that there's only limited upside potential on any of these rallies. So if right now the market continues to advance on the short term, it should find significant overhead resistance again in that area and then consolidate again into the summer. Overall, it will be a difficult time for buy and hold investors. Those people that are swing trading short-term swings higher and lower can try to participate in those moves. The US dollar is retracing right now its short-term move higher after the euro strengthened on the Greece debt restructuring. The next 2 weeks will give us some very important information to find out whether that US dollar bottom was a legitimate one or whether or not there's something else underway. What we're particularly in these levels, we'll talk about the US dollar index chart right now. We'll be looking for some important support levels to come in on the US dollar and subsequently base and reverse off the zone. There's an increasing probability at this stage, and we continue to stand by it, that we've seen an intermarket asset class rotation that will last for the summer. And where we should continue to see the U.S. dollar retracing higher, and subsequently bonds continue to maintain the short-term trend higher, and commodities continue to consolidate, which should put pressure on the stock market. When I take a look here at the S&P 500 on a daily chart, you can see that we're going through about a 4-day bounce higher on the markets. And as that bounce is occurring, we're now coming to some very critical levels around this 1344, 45 area marked off by that blue line. That's sort of the home of the retracement zone of that entire market consolidation. If the market turns down from these levels, we should have a very quick retest back down to 1290 or 1300. But in the same regard, right now, if there's some bullish follow through on today's pop higher, and we get any substantial push above this 1345 area, then we have to go to a number of different scenarios, which include the idea that the market needs to double top, retest previous highs, and go back deep into that blue box zone. At this stage, we don't want to run that scenario until we see how the market reacts at this exact level where it's at. Again, any immediate reversals off of this zone would imply that the market has another full leg lower back down to 1290. Next, I want to take a look at the U.S. dollar index futures, and this blue retracement zone that I marked off there is actually that key level where we're watching. In many cases, when bottom is put in, there are situations where the market will come back and create a key bottom retest. Sometimes that retracement goes all the way down to the previous low, creating almost like a double bottom. But whether or not the U.S. dollar finds support in this blue box will be crucial, because if we have an immediate reversal back up in the dollar out of this area, then the U.S. dollar should make that advance up to 77, 77.50 like we've been expecting all along. Really, the only scenario where we have to start considering other scenarios is if we see sustained weakness below the 74 level on the downside. At that moment, we'll consider the scenarios of a retest of the previous low or even a resumption of a downtrend. But at this point, we're looking for these supports to hold. Next here, I want to take a look at a chart on copper futures, and copper has been retracing higher in a flagging formation on the upside and continues to hold up while the US dollar is doing a little bit of backfilling. It'll be crucial to see what happens here with the dollar, because if the dollar reverses and continues to advance higher, copper should roll off of these zones somewhere around this 420, 430 area, roll back down, and then head to retest down to 370, 380 area. But if the dollar does not make that trend move and the commodities base here, then we'll have to look at a number of different scenarios. But right now, we continue to expect that copper should still have one more full leg lower before we really start seeing some buying opportunities in the commodity. Next year, I want to take a look at gold futures, and gold is at a very interesting juncture. The blue line right there marks the top end of its retracement zone after that one massive sell-off. There's been a number of occasions, if you go back to October, November, December, where very quick selling had to come back and retest previous highs. If the gold does not reverse off of this exact level where it's at and immediately start to consolidate, we have to look at a scenario where we can see things like what happened in November, December, where it came back, retested the highs, and then sold, came back, retested the highs, and then reversed back down again. Those types of consolidations off of these zones are fully expected here. We don't believe at this moment that gold represent a really good buying opportunity until a little bit later in the summer. Next year, I want to take a look at silver futures, and marked off a retracement zone where we believe silver will find some significant overhead resistance. We continue to see a flagging retracement on the upside of silver. As silver reaches this point, we fully expect there to be another attempt to retrace back to the bottom end of the zones on silver. At this juncture, after such a massive reversal off the top, it is very unlikely silver is destined to come back to its previous highs. So at this point, we're just looking to see where and how high silver goes on this short-term push higher before it reverses and still makes one more leg lower. Next year, I want to take a look at crude oil, and crude oil had as well that major reversal on the downside. It continues to strengthen a little bit here as it's going deep into its retracement zone, which could even go as high as that 105, even as high as 107 on the upside. We don't want to trust any of these rallies in crude oil. We anticipate that once crude oil finishes this move, that there still is one more leg lower in crude oil, probably to retest again the 96 level on the downside, maybe even as low as the 90 to 92 area on the downside, where the major consolidations occurred at the end of last year. Finally, I want to take a look at the 30-year Treasury bonds, and more or less we've seen a substantial rally in those Treasury bonds during this entire consolidation. At some juncture here, expecting a retracement of the Treasury bonds back towards that 122 to 122.5 area is expected. So at some point, even though we do believe that there's been a good reversal here in the Treasury bonds, taking a step back before it makes another advance attempt is very natural here. That was your Monday Futures Market Outlook. Thank you for joining me.